The semiconductor sector has reached a critical turning point. For the last few years, the market was fueled by chips used to train AI models. But as we enter 2026, the focus has shifted from teaching AI how to think to inference, which means actually using those models to perform tasks in the real world. The financial stakes are massive. Following a nearly 50% gain for the VanEck Semiconductor ETF in 2025, investors are asking if the sector has more room to run. The one-size-fits-all dominance of the GPU is being challenged by a wave of custom silicon chips, as the world's largest tech giants transition from being Nvidia's best customers to its most formidable competitors. Adding to this complexity is a new era of active industrial policy. With the U.S. government now holding a strategic stake in Intel and new tariffs reshaping trade with China, the 2026 chip cycle could be as much about geopolitics as it is about innovation. So who are the winners and losers as AI moves out of the lab and into enterprise? And what do investors need to know? Here with me to talk the key themes and trends that will drive the chip sector in 2026 is Robert Maire, president of Semiconductor Advisors, which is a consulting firm that provides financial and strategic advisory services to technology companies. And Robert, it's great to get your expertise today. And, I think when we take kind of a big step back, when we look at the last few years, there's been a lot of investing in training AI models, but the industry seems to be pivoting to inference or using that AI in everyday apps. So how do you expect that shift to impact the chip sector?
Well, I think at the end of the day, going to inference reduces the need for large die, large transistor count semiconductor devices. Right now, when you look at a typical Nvidia device, the transistor count is quite high. They're bleeding edge. It appears they've taken over the leading spot in terms of TSMC capacity. So I think one of the thoughts is that going to inference, we might reduce the demand or diversify the demand from the semiconductor supply chain.
Yeah, and when it comes to specific companies that may be impacted by this, you mentioned Nvidia. That company has become an AI leader because it's really dominated this training space. But inference can run on all types of hardware. So, what might this say about Nvidia's potential place in the market?
Well, I think overall they may lose share a little bit, but their overall growth likely will remain strong. I think the overall demand for AI chips and AI devices, AI systems is huge and probably overwhelms what likely potential share loss there could be. At the end of the day, there's still going to be constraints on the number of semiconductor devices. TSMC only has a limited amount, even though they've just increased their capex quite substantially. So even alternative manufacturers such as AMD or private manufacturers that are doing their own custom silicon will find, limitations in getting devices.
And speaking of those private manufacturers, we've seen hyperscalers like Google, Amazon, and Meta really trying to mass produce their own custom AI chips to save money and power. What, again, does this mean for market share potentially for the likes of AMD and Nvidia?
Again, I think there will likely be some market share erosion over time, perhaps over the next 5, 10 years for NVIDIA. They can't be all things to all people. I think that the custom devices you're seeing out there are customized to particular applications or particular needs, particular data center architectures, networking architectures of the people who are designing them. So everybody has their own sort of end goal or end use application in mind when they're designing these chips. And clearly, as you mentioned, power is a huge problem here. And we've seen recently in the news the power issue being brought up by Microsoft that, reached political circles regarding what we're doing to the U.S. Power generation grid. So I think that will likely become a larger and larger issue over time as the transistor counts have gone up. We're at 1,000 watts a device or more, and you put hundreds of device in a cabinet, and you've got a town's worth of electrical consumption in a single rack cabinet.
Yeah, and we talked about some of the limitations, power being one of them. We've also seen the industry really grapple with supply chain shortages, especially during the COVID era. But do you see more custom chips impacting supply, and if so, what specific categories might be hit?
I think you're still going to have some constraints. TSMC did increase their capacity to build semiconductor devices. However, it usually takes on the order of 2 to 3 years to increase that capacity. You start spending now and writing checks, ordering equipment, building new facilities. So it takes a long time in the semiconductor industry to ramp that up. So over the near term, I think we're still going to be supply constrained. To the extent that custom devices may not require as much leading edge capacity or can be put together with a number of smaller, less expensive semiconductor devices or die, as, if you will, that might take away some demand from the leading edge. But I think leading edge capacity is going to be under pressure at least for 2, 3 years, if not more, going forward.
Do you see NVIDIA's next gen Rubin platform potentially as an answer to this shift toward inference and custom chips and the power problem that we see?
Yeah, well, they're certainly trying to produce their own system rather than saying, "Here's a chip, put it into your own architecture or your own rack cabinet of different devices with photonic connectivity. We'll provide all that for you, so we'll do a systems level integration." So I think for the smaller hyperscalers and perhaps not the largest, that looks quite attractive because developing your own system and your own hyperscale infrastructure is quite costly, and only the largest guys can do that. So I think it's a very attractive alternative to rolling your own, so to speak. That's probably not going to slow down the larger hyperscalers, but it's certainly an alternative that looks attractive to a lot of people.
And with more of this AI technology moving into production, we are seeing some bottlenecks in terms of speed of network. Do you see any of that AI spend shifting away from processors to companies like Broadcom and Marvell that focus on this type of technology?
Without a doubt, we'll see more spending based on photonic connectivity, more spending on overall communications to increase the speed, to you know, reinforce the networks that are out there. Clearly, much as we've seen a strain on power supplies, we'll see a strain on the network, and are already seeing that strain on the network. So there's going to have to be building on infrastructure and network connectivity to, offset all these huge demands that AI places on the existing network. We're probably again going to have a multi-year effort to try and expand the capacity in not only the networking area, but power generation area because of AI.
We've been focused on AI chips, but the memory chip market is also a pretty big player here. China has been pretty pivotal in that market. Is that where the memory chip game is right now, or how have you seen those prices really stabilize?
I don't think China is not a huge player in the memory market. It's still dominated by Samsung, SK, Micron. That's sort of the big three that dominate the memory market, and they've been caught a little bit flat-footed. Much like the logic market, the entire semiconductor industry has been burnt many times before due to the cyclical nature, particularly the memory market, which is a commodity-like market. So they've been slow to invest and invested more cautiously. And the AI wave has just put a tremendous demand, upon memory, particularly HBM memory. So we're seeing a lot of change in allocation of memory devices over to HBM and things like that. And again, that's a multi-year sort of prospect. I think China will likely supply most of its internal demand for AI-related memory, probably not much of an impact on the international market. If anything, they may be a slight depressant, but given the overwhelming demand for memory devices, it's going to be hard to satiate that demand in the near term. This cycle for memory, and it is going to be a memory cycle because sooner or later we'll build enough capacity and supply enough memory, is likely one of the longer ones that we've seen, probably lasting at least 2 to 3 years, in my view.
And we've seen the Trump administration ease certain chip restrictions when it comes to China. Do we expect that policy approach to continue in 2026?
I think near term, I think they're trying to listen to the industry, and given the constraints on not only memory devices, but just leading edge AI devices, constraining the growth right now would be problematic for everybody involved. And I don't think anybody really wants to see that. perhaps restricting sales of some of the bleeding edge or AI devices to China might help the availability outside of China, but again, not a huge amount.
Do we think that the threat of export controls has backfired somewhat by forcing China to really create more of an efficient, independent AI stack, or how do you assess that situation?
Now, without a doubt, restrictions on not only devices themselves, but semiconductor equipment and all things related to advanced semiconductors, such as lithography tools from ASM in the Netherlands, and that has really caused China to double down, triple down, perhaps on building their own equipment, building their own fabs. Recently, we've heard word that China wants all their new semiconductor fabs to have at least 50% Chinese-based semiconductor equipment in them, which is, quite a step up from where we were just a few short years ago. So, if anything, we've pushed the Chinese government and pushed the Chinese industry to, be certainly much more self-sufficient and to spend a lot more on it. So, I don't know if I call it backfire, but it certainly has accelerated their efforts in the area.
Well, we've also seen a push to be more self sufficient domestically as well. The Trump administration's been ramping up investments to shore up that domestic chip production. We saw the stake in Intel, as well as applying those tariffs to more advanced chips overseas. What do you see the timing for that? I mean, how do you think that's moving the needle within the chip sector?
The United States has gone from 35-40% share down to share of 10-15% in a relatively long period of time. It was a long, kind of slow decline. We're not going to go back to a 35% share overnight. This is perhaps a 10-year or more effort to build more fabs in the U.S. Near term, we still have an outsized risk in Taiwan. If Taiwan were to change control, that would certainly upset the global semiconductor market, really turn it upside down. And we're not ready for that and won't be ready for that for quite a number of years. So I think the effort is certainly good. If anything, we should actually be spending more money and focusing on doing much more. I think we will likely face a significant problem if there is, political unrest in Taiwan right now. So I don't think we're doing quite enough. We're doing a lot, but need to do more.
And also, in terms of risk, if Chinese tech giants like Alibaba can build their own AI without Nvidia, how do you see that reshuffling the chip market?
Well, I think there's certainly a lot of push for homegrown solutions. We saw that with DeepSeek, but DeepSeek didn't turn out to be exactly, the revolution that everybody thought it was going to be. I think it's very difficult to get around some of the demands of advanced AI chips that have just very high transistor counts, high density, high bandwidth memory. You can, get creative with software and new architectures, open systems, and the like. But the fundamental limitations on what you can do really come down to transistor count, memory availability, and things like that. So, yeah, I think there'll be a lot of kind of creative ways around it or to try and reduce it, inference being one of them. But fundamentally, everybody still wants a faster chip.
Yeah, and we've seen billions in strategic investments from chip makers into their own customers. The Nvidia OpenAI deal comes to mind. How much concern should there be over this kind of circular financing?
Yeah, the circular financing has always sort of concerned me, certainly. It just doesn't feel right. But then again, I think trying to stimulate the infrastructure of AI and trying to stimulate the growth of AI is a good thing, no matter where the funding comes from. Certainly NVIDIA wants to stimulate the demand for its own devices and has done a bang up job of it. The demand is, off the charts. So while I have issues with it, I think the net results have been, certainly positive to the industry, positive to the companies who've participated in it, and has had its desired results.
And are there any certain metrics investors can look at to gauge if cycle is sustainable, or are there any things that are on your radar that you think might be overlooked right now within the sector?
Well, it seems the depth and breadth of AI is perhaps much more than prior cycles that we've seen in the semiconductor industry. I've been covering the industry for over 30 years, and I've been through the PC cycle, the internet cycle, the mobile phone cycle, and various I shouldn't call cycles, but waves of demand for the semiconductor industry. And this seems to be unique in that it has grown very, very sharply, virtually overnight. It's certainly broad based, and the demand has been uh, I would say almost overwhelming. We've really swamped the capacity that's out there in both memory and logic. So I think over time, all these waves of technology have gotten larger, and this so far, is a huge wave and the biggest of all that I've seen in my history. And who knows? Maybe the next wave is quantum computing, and that even dwarfs AI at some point. But right now, it looks like a huge multi-year wave. And if I look at prior waves of technology-driven semiconductor demand, this is easily 10, 20 years of, probably pretty strong demand.
Well, Robert, thank you so much for your insights today. We really appreciate it.
No, happy to be here and happy to help.